Let me know 10 seconds before you want to start.
Hi, 10 seconds. Good evening and thank you for being here. I'm Dan Johnson, representing Greenback Securities. On January 3rd, we recommended a buy of Hertz brand at $30.73, which was a 23% increase in the cent share price. This is also 22% above what analysts forecasted. We expect this increase due to revenues that they had not accounted for. The current share price is $21.60. We believe our target is realistic, partially due to the fact that in September of 2014, it already reached $30. We're optimistic for four main reasons. First being that economic recovery that continues to take place will foster growth in the airline travel and therefore the car rental business. Second is key synergies due to the acquisition of Dollar Drifter. Third is operational efficiencies that are a result of improved technology that should enable them to maintain competitive low prices. And fourth is the promising spin-off of their equipment rental business, which should enable them to focus on their primary expertise, which is car rentals. Simply put, we believe Hertz is the premier car rental brand and that they're undervalued. We can safely assume that their share price will only increase in the coming 12 months.
Thanks, Dan. Hertz is a global car rental and equipment rental company running through those 4 brands in 145 countries. Hertz has the largest market shares on airport car rental globally and second largest shares of airport in the United States. In 2013, Hertz generated 10.8 billion revenues, in which 73% come from the United States and also 83% coming from the vehicle, another 17% coming from equipment. And past several years, Hertz has a very successful merger and acquisition. And we believe there are 2 key synergies from those acquisitions. The first is the acquisition of the Dollar Drifter, which happened in 2012, and which generated 160 million and also another 300 million for Hertz. Another very successful investment is the joint venture structure with China Auto Rental Company, which has the largest market shares in China. Hertz invested 130 million in exchange for 90% shares of this company. And this company just went public last year in Hong Kong, September 2014, and the market capital just jumped up to 3.45 billion. And the value of this investment has jumped to grow to 600 million. And also because the Chinese car rental market has strong growth, this market leader will gain more market shares in these fragmented markets. And we think the success of this company will definitely back up our reputation of Hertz. Now I'll pass to my team.
Thank you, Josh. So we all know that airline industry has such a big impact on car rental industry. For this presentation today, we only want to focus on the US on-airport market segment. Hertz is currently in the leading position of that market with 37% market share. The US on-airport market segment contributes 80% to the car rental revenue and 64% to the total revenue. From our research, we calculate a very high correlation of 0.94 between airline industry revenue and Hertz revenue. The US economy is in such a better condition compared to the rest of the world with the oil price. As you can see, travel and tourism is increasing, and also load factor for the US carrier is currently sitting at 84% compared to 81% of the rest of the world. So we want to take one step further by trying to find the operating revenue of the US carrier for domestic passenger, because we believe that those numbers represent the true customer of us. And that number jumped from 139 to 146 to 157 billion from 2013 to 2015. So now, why does Hertz want to spin off its equipment rental business? The equipment rental business had a 66% increase in revenue and 44% increase in EBITDA from 2010 to 2013. We collect data for construction spending and showing that US construction spending is growing at a very consistent rate. For the US revenue, 26% of the revenue comes from industrial, 38% come from construction, and the rest come from environmental. We estimate that the construction revenue is going to grow at 13%, the industrial is going to grow with 14%, and then the environmental is going to grow with 5%. In total, we expect that Hertz equipment rental revenue is going to grow at 8.6% annually for the next few years. And now I'm going to pass to Joe for financial analysis.
Thanks, Tim. So far, painted you a little bit of a picture in terms of background, competitive landscape, and competitive positioning. But what does this really mean in terms of numbers? So we thought there's a few key areas we want to focus focus on in terms of financial statements. As we talked about, the U.S. car rental and U.S. equipment rental have historically driven the revenues for cars. As you can see here, dating back to 2009, we have a historical CAGR of 10 and 8% respectively. So I'm going to get into our forward projections. Risk and reward. In the last year and a half to 2 years, Hertz really focused on their risk or non-program vehicles. And what this does is allow them to really focus on their resale value instead of getting into prearranged purchase programs with dealers. As we see from 2011, they started to slowly increase their risk vehicles. 2012 was a little bit of an anomaly because that's when they ultimately required title reviews, where they had a big influx in their fleet size. Cash. We talked about the Hertz spin-off, the equipment rental business. What this is going to do is generate $2.5 billion of tax-free cash. Hertz has had a net debt to EBITDA of approximately 3.9 historically, when their targets are around 2.5 to 3.5. So all this $2.5 billion, what this is going to do is allow them to take $1.5 billion and they're going to plow back into the company. What we did is, using our EBITDA projections and holding their debt constant, EBITDA projections low, we already anticipate their net debt to EBITDA come down to 2.8. Of that $2.5 billion, another $1 billion was management put in place a share buyback plan, where they're going to take $1 billion and buy back shares over the next year or two. Using our target price of $30.73, even if they only do half of that buyback, we anticipate this will equate to a 4-cent increase in EPS. Now I'm going to turn over to Sam to talk a bit about our valuation.
Thanks, Joe. We use the discounted cash flow model to value Hertz. As Joe spoke about the revenue growth in the past, in future from 2014 to 2018, we expect the revenue growth of 7.4% CAGR. 2014 is estimated as the audited numbers for Hertz are not yet out. While as you look at the depreciation and the capex, they more of remain in line with the revenues. And we got a WACC of 7.8%. Our WACC was based on our cost of equity of 14.12% and our post-tax cost of debt at 3.37%. The terminal free cash flow growth rate is at 3.6%. Our assumption is at 3.6%. You can see the equity value breakout, which shows a terminal value of 64%, while the present value in 2018 is at 36%. By this, our share price target was at $30.73. We would like to back our perpetuity growth method with multiple support and sensitivity analysis as well. As you can see that we have allotted Hertz a 6.8 times EV to EBITDA multiple. This 6.8 times is in line with our mean of EV to EBITDA of our peer group set. And as you can see that Avis, the closest competitor of Hertz, is trading at 6.9 times EV to EBITDA. We also did a sensitivity analysis to check what if we miss our EBITDA margins by almost 5%. Even by missing our EBITDA margins by 5%, we can still expect the stock price close to $30. Our team also conducted a M&A analysis where we analyzed the deals done in the industry in the past. From our M&A analysis, we found that if Hertz was supposed to be taken on tomorrow, or by the previous analysis, the stock price was at $29.50. By our perpetuity growth method and supporting it with multiples and M&A analysis, we are pretty confident that the stock price eventually will rise up to $30.73. Now I'd like to invite Diane to take over the investment risks.
Thanks, Scott. And there are some key risks that Hertz faces. And the first one is residual risk. The percentage of the program car has increased for 77.5%, and the value of non-program car has increased, which all led Hertz to lose its profit. And the penalty of air travel and the development of the new program car sharing program can also be the risk for Hertz, and especially the car sharing program, because there are 18% of Americans has wanted to enjoy the program, and so it's captured parts of the car rental market share, and therefore, based on these four major drivers, we can recommend to buy Hertz stock share, and